The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
If you're planning on buying or selling a home, the Real Estate Crew's got news for you at the Real Estate House Party.
With attorney Rick Carter,
Real Estate House Party.
paralegal Kathy Holtshouser,
Real Estate House Party. Come in, have fun.
and comedian Tony V. Now, here's real estate attorney Rick Carter.
Welcome and thanks for joining us here on the Real Estate House Party. You're already laughing.
I know.
Miss Paralegal Extraordinaire. I saw this car commercial the other day. They had about 70 or 80 people on it, and they said out of the 70 or 80 people, their big announcement was, we have about 100 years of experience among us. Do the math. It was like some of them must only have worked there about 6 months. But today, we do have 100 years of experience because I'd like to introduce our learned panel today. John Marroni, the Iceman from NewFed Mortgage.
And he has, what do you have, like 30 years, 35 years in the business?
No,
23.
23?
He's the newbie of the group here.
I have you beat.
Yeah, I know you do.
Wow.
Yeah. How long you been? Like 18?
29 years at Carter Law Office.
Conveniently located in Reading, Mass. and Salem, New Hampshire.
Yeah, we have a new digs at Salem, New Hampshire. Come visit us.
It's right around the corner, right?
Yeah.
John, we appreciate you getting here so early today. We did a lot of prep time for this.
Yeah, that's okay.
All right. No, and we got to.
We're good.
And look who else we have. We have Lou Chinappi.
That's awesome.
Yeah, from Arch Mortgage Insurance.
Hello, everyone.
And he actually has worn a lot of hats over the years. We first met Lou when he was at Stoneham Co-op as
Correct.
a banker, right?
That's right.
Oh, I forgot about that.
I have 37 years in the business.
Wow.
Imagine that.
Wow.
That is awesome.
You have me beat.
Yeah. We used to come down and visit you, try to get
Yep.
business from you guys.
I was a mortgage banker for 15 years and then did a little stint in title insurance for 17, and I've been in mortgage insurance for 4 now.
Wow. That's awesome.
I loved calling on your boss when I went in there because I don't think attorneys used to do that, right?
No, you were the first attorney to come into the bank and solicit business because attorneys used to stay in their ivory towers and we would just send them the business.
Yeah.
And Rick Carter walked in and
With his baseball hat.
Yeah, and he had a suit on back then.
I did.
He did
I
have
still
a
own that
on,
suit.
And he came in and he told us about the services and the features and benefits, and everyone's mouth was agape when he left and said he's an attorney and he's in here soliciting business, and I think it just opened up a whole
Then
He was the pioneer of that.
Everyone was pretty impressed except for I'll never forget your president. And we won't mention his name, but he calls me up and he says, I know you just
Did you just walk into my bank?
He goes, you know what? I know everyone else was impressed by that, but I don't give a rat's ass about you attorneys around here. I said, oh, okay.
Wow.
We're going to get along well.
Well, Rick, you said something a few minutes ago. Now, in every organization, everyone is a salesperson.
Right.
Everyone has to have a sales
no,
mentality.
you hit it on the head. I mean, my forefathers, the attorneys, used to say, all right, I'm closing from 10 to 2 at my office, Monday through Thursday. I got golf on Friday, and that's it. And they kind of dictated the terms. So I said, well, maybe we'll change this around a little bit.
On the totem pole now, right?
I love seeing I think there's a bank, Citizens Bank, saying, oh, we got a new feature. We actually go to your house to close a loan. I'm thinking, okay, thanks for the new feature. You didn't know Carter Law Office in the 80s there. So.
We've been to maternity wards.
I've been maternity wards. I closed one couple
at the
months
Home
ago.
Depot?
Home Depot, aisle 5.
Nice.
I came back, and there was a lot of wood product all over the closing
sawdust.
package.
Yep.
So, but this is going to be a good show. You know why? Because we got to help our millennials and our younger group out. We're finding out they are in competition with the older generation who's selling their houses. They have $300,000 or $400,000 to spend on their new house.
Right.
We are worried about the millennials pulling in, trying to buy a house when they don't have much of a down payment. So.
Well, in this market, right?
The
houses are going very quickly, and they're going to a cash buyer,
right?
And that's who the older generations have the cash.
Right. There's so many young homeowners that are just frustrated because they're out looking for a home and they put a bid in it and they can't get it.
And they're not competitive because they need to go get a mortgage and they don't have a big down payment or anything like that.
Right. And the key is to educate them on the process. They need to start with someone like John, get pre-approved, know what they can afford before they start looking for a house.
So tell us, you were telling us a really interesting concept about
Hops for homes.
yeah.
You
All
like.
right. So one of the things that
piqued my
we're doing.
curiosity.
So of all the
Yeah.
stuff Lou has to offer, you're wondering about hops for homes and how you can go drinking
And I wanna
during a
know-
seminar.
One
I
of
want
the
to know if you need our help.
One
so.
of the things we like to do is, on social media, we post what we call hops and homes, and we go to different breweries on a Thursday night with a loan originator, with a real estate broker, with a closing attorney, an MI company, and we just go and casually educate people on the process of buying a home, and we let them know that a lot of them think they can only rent and they're only going to be renters, and we show them the path on how they can become homeowners.
That's
And
awesome.
it's something they want to do.
I'd like to be involved in that. How about you, John?
Yeah, I'm writing that down right now. I thought it was an Easter thing.
You're just writing down hops. You
Yeah, I
don't
am.
care about the home part.
Yeah.
Yeah. So, John, tell us in your world. So there's a few things in your world, different programs, FHA loans, maybe MassHousing loans, where you can get some programs where there's not, you don't have to put down as much of a deposit, right? Actually, let me back up.
I'm all set. I don't
Oh,
need
we
to
all
talk
done?
now.
All right. Thank you. We'll see you next
Thanks
week.
for having you. Thanks for coming.
All right. Let me back up a little bit
They
because
call that
sometimes,
stealing thunder. Right?
Yeah.
sometimes we talk about.
You know.
All right. Back to Lou.
Yeah, absolutely.
You finish your night.
Enough about John. Let's talk about me.
That's our new hashtag. All right.
I'm used to this.
All right.
Yeah.
Yeah, you've got a
And
lot of
but he
siblings.
keeps coming back.
He keeps coming back. Yeah. All right, so let's back up for a second. Kathy Holtshouser, let's
Yes.
back right up.
Yep.
What is the optimal amount that people have always thought that they have to have put down?
20%.
20%. So if you
How'd I
buy,
do? Is that a good answer? Right?
I prefaced her this about, I prepped her on this. So if you're buying a $500,000 house, you'd have to have $100,000 saved up for your deposit.
And listen, the likelihood of anyone that didn't just sell a house of having $100,000 in the bank, and especially a millennial, is what, slim and none?
Right,
They
right.
have student loans and they have car payments, and the chance of
Right.
them having.
So to Lou's
Right.
point, some people think, oh, I don't have that $100,000. I don't have that 20% down.
So they keep throwing their money away at
and
rent.
What we see with a lot of younger people or first-time home buyers is they have the income, they can afford it because they're paying rent now, and rents are exorbitant, specifically in the Northeast.
Yeah.
They can afford the payments, but they don't have the down payment. That's the biggest obstacle to home ownership.
Right.
And what private mortgage insurance does, and what some of the programs that John's going to talk about today does, it alleviates some of that pressure for the large down payment. And people can buy a home with as little as 3% down now.
All
So
right.
private mortgage insurance is different than like life insurance or disability insurance.
Correct.
Mortgage insurance, why don't you explain that a little bit? It's
Private mortgage insurance, what that does is it's a guarantee for the lender that the homeowner is going to make their payments on the loan. So obviously, skin in the game is a risk factor when someone's buying a home. If someone's putting 20% down, they're more likely to make the payments, supposedly. So what private mortgage insurance does is if someone's putting 3% down, it makes a guarantee to the lender that should they default on their payments, that they're going to be made whole in that situation.
By the private mortgage insurance
by the
company.
private mortgage insurance
So this
company.
insurance only really kicks in if there's
If
going to be
they-
a foreclosure.
Exactly.
It
And
doesn't
default.
kick in if one of the homeowners passes away or is disabled. So that's like life
Correct.
insurance credit.
Right.
So
No, that sounds too good to be true, but we know it's true, but who pays for it? Right, the borrower could pay for
the
it?
borrower pays for it or the lender pays for it. There's
Okay,
different
it's
programs.
depending on
Right.
the program that they get involved in.
Most often, it's the borrower paying for it,
Mm-hmm.
and we like to promote borrower-paid monthly MI.
So it would add-
it would be just an added payment to the mortgage payment each month until the loan, pays down significantly, and we can talk about that in a little bit.
So one myth, and then we'll get to what John has the programs that you need less than 20% down, but one myth or one thing that people say is, how do I get private mortgage insurance off my mortgage?
Okay, so there's two ways. So when someone buys a home and they have private mortgage insurance, when that loan naturally amortizes down to 78%, the monthly private mortgage insurance automatically drops
Oh,
off
it
that
does.
property.
Okay.
But if you're a homeowner and you bought a house and you think you've experienced some appreciation in your market, or you've made significant principal payments on the mortgage, or if you've made significant improvements to the property and you think you're at an 80% LTV, you can go to your servicer of the loan and request that they look at it to have your private mortgage insurance eliminated. And what you would do is you would pay for a new appraisal.
Okay.
And then the servicing department would look at that, and if you were in fact at 80% LTV, loan to value, they would eliminate your private.
So you don't
mortgage
necessarily have to
insurance
refinance. They
Nope.
could just petition
No.
the
for you.
lender.
Right. Correct.
Okay.
Right.
So John Marroni, let's do a compare and contrast today.
Yeah, go ahead.
So you have a few loan programs. So you deal with FHA?
Yeah, but let me before we get into that.
Yep.
I want a nice segue for what you've been talking about. See, the old days, it was you had to put 20% down, or you were not buying a house.
Right.
You know, PMI to me was like the greatest thing that happened in terms of home ownership, because a lot of times I'll hear people say, "Oh, I got to pay PMI. I'm not going to buy a house." I'm like, "What are you talking about?"
Right.
They're like, "Well, that PMI, you know, because their parents say how it's evil, it's a waste of money, and all that." And I tell people, I said, "Listen, forget about what it is. Let's talk about what it does for you." And they're like, "Well, what do you mean?" So I did a little example. Let's say someone's buying a $400,000 house, and they're just putting 3% down. Someone with good credit. I figured their monthly PMI is going to be about, I'll call it like $200 a month. All right, so that's $2,400 for the year. So they're like, I had to pay $2,400. I go, yeah, but let's say you paid $400 for the house, and the house appreciates 3%. Next year, you gain $12,000, and tax-free. If you hold it for 2 years, you're not paying any capital gains, versus the $2,400 that you spent to get 12. I'll do that every year.
Yeah.
Right.
So it's leverage, is what it is.
Can you guys?
That's a great example, John.
Can you write off?
PMI?
Yeah.
Well, with the new tax law, as of last year, absolutely up to like 100,000, or kind of phased out. Who knows better than me on that? But this year, in theory, yes. But then you get that 20.
Caps.
It's based on income levels and things like that. So
Okay.
we just encourage everyone to speak with their accountant
Okay.
if they want information on tax deductibility.
So John Marroni,
of
to
MI.
your point,
Yeah.
so we do the title searches. We're doing title searches of people that have bought 2 or 3 years ago condos for $300,000. They're now selling it 3 years later for like $384.
Right.
So to your point, why not pay that mortgage insurance? So you've paid whatever your example was, $2,400 a year. So they paid.
Yeah, let's say you put $2,400 into the market. Let's say you doubled your returns. That's not even $5,000.
Right.
You're leveraging.
And you know what, John? That's a great point. I love your example, because think of how long it would take to save that
Yes.
kind of money.
Yeah.
Whereas now you're getting
Well,
that
you're
money in
just
appreciation.
using it as a vehicle to get in the
Right.
home, and then you're throwing money into your home as opposed to rent. Like
Right.
think about all the
So if
pros.
that individual decided not to buy because of the mortgage insurance,
They'd still be paying
Right.
out
Right.
rent.
And that's like, I just used 3%. I didn't assume what's happening in Boston, where houses are appreciating a lot faster.
Oh,
Right.
At least over the last few years.
we're seeing prices doubling on some.
Yeah,
some
and that's
stuff.
and that's what you call leverage.
right.
You're using other people's money, and the PMI it got you there. Like I'll say, forget about what it is. Just think about what it's doing for you.
So
Right.
someone calls you up and says, "I don't have the 20% down."
Right.
So you can give them all these options. So
So like MassHousing has a program around here. As long as you don't make more than, I think, like 103,000, you qualify for their version of 100% finance, and it's actually 2 mortgages. It's a 97 loan to value, and then the other 3% is the down payment assistance, which comes in the form of a loan, up to $12,000. So basically a $400,000 home, they're into it with no money down. That 97% does have PMI. So without PMI, that program would not be possible. So no money down. So many times now, people are paying $2,000 a month rent. They can't save. They have no problem
Right.
making the payment.
Right.
So they can just, all of a sudden just walk right into this condo or single-family home.
are there some pros and cons to FHA loans, you think, on
That's
your
not,
end?
That's not FHA. That's just
That's just a MassHousing.
Or how about on
Yeah.
FHA loans?
FHA loans are a great product for people that need it, but generally what we find is if someone has good credit, it's probably a better deal for a private mortgage insurance product. But
Just to go
I'll let John speak
conventional
more to
with PMI.
FHA and the benefits of it.
Yeah, absolutely. And the other thing, too, is Lou had mentioned, under the Principal Reduction Act, when you pay it down to 78 loan to value, let's say someone's starting out. Let's say you have an attorney just starting his own practice.
Right.
It says, I get very little money. but boy, next year I know I'm going to kill it. All of a sudden he pays down that balance in the year or two. The PMI goes away when it hits 78%. So it's you kind of look at the whole. It could be a
temporary situation.
Oh, it's definitely a temporary.
Yeah.
It's just I think worst case, what is it, like 11 years or something like that before you hit that 78, depending on how much money you put down.
Sometimes, it could be up to the midpoint of the amortization schedule, pretty much.
Right.
Yeah.
And then, we should probably mention the other benefit to private mortgage insurance. If you say you had $20,000 to put down on a house, you could buy a $100,000 home and put $20,000 down, and in a couple of years, you're probably going to outgrow that home and need to move.
Of course.
Or you could buy a $400,000 house with $20,000, 5% down with MI. Now you have a house you're going to be able to grow into and stay. And, one of the ways to accumulate wealth is to stay in that home for a while and let it appreciate and
get equity.
And make benefits.
Yeah.
Or you hit it on the head, and maybe some people just want to keep that $20,000 in reserve for that new house. A lot of times as a first-time home buyer, they might need a little work to that house, so you're holding it for a while and improving it with that money. You're right. So we're going to backtrack just a couple seconds, then we're going to go back to this. We got to talk about some other ways that you could probably buy a house with no income down from our perspective without mortgage insurance. But
I have another way.
Oh, okay.
I actually have 6 other ways.
He has 10 other ways.
I got 6.
Is Tony V's Vino friend involved or what?
Vito.
8.
All right. No, go ahead.
All right.
Go ahead.
So here's another one.
This is how Johnny usually does it.
Apparently, we took the focus off John for too long.
Oh, don't worry. He'll swing it back.
I do. I always wait.
He waits for his
very
moment.
patient.
He does it usually right at the midpoint there, and then he swings it back.
It's like a relay race. I'm the last guy.
and then he has the mic for the rest of the time.
None of us are joking about any of this. Go ahead, Mr. Relay Man.
Okay. So I know financial planners hate this, but again, it's a way of leveraging it. I say borrow from your 401k. Some financial planners say, but you're going to be out of the market. I'll go back to that example. Let's say you took $12,000 out of the market and you put it for your down payment. Okay. Now, realistically, let's say the market, you missed out. The market got unbelievable 50% returns that year, right? So that you lost out making $6,000. But again, let's go back to that 3% appreciation. You just made 12. You're still ahead $6,000.
Yeah.
And you're putting money back. That's on it. Not every year does 50% return. Would you agree with the market?
Right.
I can't remember the last time we had that. Even this. So, and the money. Again, it's tax free. You're taking it out tax free, and you're putting it back in, so you're not going to pay any penalty. Your money's growing tax free from the.
See, you thought John was just an originator.
Yeah,
he's a
just
financial
another pretty
planner.
face.
More than a pretty face.
How do I look?
All right. So what you're saying is through financial planning, it might make sense to get mortgage insurance as well.
Yeah, absolutely. Yeah.
Yeah. Okay. No.
Absolutely. Yeah, you put it all
He's
together.
just,
Wow, did you see
he's
the
just
look?
coming up with ideas on how to buy a house when you don't have 20%.
All right. Go ahead.
Another way,
Sorry.
of course, it can be a gift. Most of these programs allow gifts. 3% down, you can do the gift. Or
So can I ask you a question, though?
You may.
What if you got 10% down?
Yeah.
Would the private mortgage insurance would be that much less?
Yes,
it would.
Okay,
Yeah.
so you could borrow some from your 401k or get a gift and still have maybe $100 a month
Sure.
PMI
you
payment.
understand everything. Yes.
I'm just trying to explain it to our listeners.
That's right. You could do all those, because then you put it all together. It's like the greatest hits. You can get some cities offer down payment assistance.
Yeah, some of
depending
the
on what your
cities,
income.
right? Yeah, like
this
Lynn or Boston.
Malden had one. I don't know if they still do. A few others.
That you don't have to pay back until you
it's
sell
like-
the house, right?
Right, or you're supposed to hold it for like 5 years. Everyone's a little
Right.
different, and then there's income restrictions. So some of these homes closer to the city, they have income limits, so people don't qualify for the houses. So you kind of see less and less.
So, but
of
what
that.
you're saying is you need to be creative. This is called creative financing, right?
Well, it's more like, I wouldn't say creative because it's all there, but
right,
it's just.
but it's
Creative might have a bad undertone.
It is. It is.
Yeah.
You know?
No. It's,
No,
it's
I know.
Like,
I know how you're saying
it's
it.
like thinking outside
Don't
the
ever tell an
box.
originator they're going to be
Yeah.
creative about
So-
this.
Oh, I didn't
Yeah.
know. I didn't mean like that.
Yeah, it's a bad thing. You know? It's just like start. You wear orange.
Yeah.
You don't look good in orange.
No, orange is the new black. Yeah.
It's thinking outside the box on how to buy
Right,
a house
yeah.
without
Exactly.
20% down.
And Kathy,
absolutely.
that's a great point because that's why it's so important to work with the right professionals that are going to show you what all
At
your
the
options
brewery.
are. Yeah, exactly.
Keep coming back to that.
So a USDA product. There's
Oh.
no money
Yeah.
down. So that has to do with those rural areas. You type in the property on the USDA site.
Which is surprisingly
Yeah.
Not as rural as you
Yeah.
think.
Yeah,
I think
a lot
there's-
of things like south of Quincy down to the Cape qualify, even some parts of Middleton. You know, what I found interesting is I was talking to one of my counterparts just outside of, I think it was Philadelphia, and a lot of those properties qualify. And she was telling me that even if people have a ton of money, they have that farmer mentality where you put nothing down because someday someone may take your property, so at least you didn't lose anything.
Right.
So it's like, you know, a lot of times people put little money down. They might have a lot in reserve. So, and a lot of sellers won't, you see someone's putting 20% down, but they're scraping for the 20. Or let's say even a veteran, doing a VA loan, even though he's putting no money down, he may have 20 grand
Right.
reserved. So what if the place doesn't appraise as much? He could probably still come up with the difference. So it's things like that people automatically just assume.
Right.
Someone
They
put
look
no
like a
money
better
down.
buyer.
Yeah, no, it's more of a lot of strategy.
Yeah.
You hold on to your money type
Yeah,
thing.
yeah.
So I mean, my recommendation would be like, hey, I'm putting very little money down. What the heck? Show them your assets. I got X amount of dollars in the bank. Here you go. In case it doesn't, or put a clause in saying, hey, I'm offering $400,000. It's good if the house appraises as low as say 360. I'll still buy the house. Something like that.
Right.
Should be.
And sellers shouldn't get too intimidated by it. A couple of years ago, sellers weren't
Well, it
taking.
makes them nervous.
Yeah,
the reality
like,
is
you're
it
getting
makes
a
a
VA
seller
loan or
nervous.
FHA loan.
right.
It's really
Right.
not as offensive as
No.
they were thinking at one point there, because I think a lot of times that particular offer, if you were going through FHA or VA financing,
Yeah.
was getting turned down by the seller because they thought that was such a convoluted
Well,
process.
that was like the old days. The FHA appraiser was almost like a home inspection.
Yeah.
Right? They're turning
Right.
on the faucets,
Right.
checking all
Right.
the outlets.
Yep.
Right.
Not as
right.
much anymore. I think it's just like peel and paint and then
Peeling
Rail-
paint and
maybe rail-
railings on
railings.
stairways.
Yeah,
Right.
that's right. But even a regular Fannie Mae loan, if there's a safety issue, you're gonna have a problem with it anyway.
Right.
Right,
So it's,
right.
It's more like peel and paint, and if you have peel and paint going into it.
Right, right.
For the most
And
part.
we work with really educated real estate agents, so if they're listing a house that has, a rotting railing, they're going to say, you need to fix that in
Right.
case your buyer is going to
Right.
be going VA or
That's right.
whatnot.
That's
So
part of the listing process now with the
Absolutely.
good realtor. They're
Yeah.
going to look at a lot
No,
of
you're
those
right.
things.
You're
They're
right.
very educated and prep the sellers very well.
Gift of equity is okay?
Yes.
Okay.
Yeah.
Thank you, John.
Yeah.
Yep.
All right. Let me explain what a gift of equity is. So we see this a lot of times in estate situations where, say, the house has been left to 4 kids. $400,000. It's worth $400,000. So each kid's getting $100,000 out of it. So you correct me if I'm wrong. I think what you can do is have the personal representative sell it on behalf of the 4 kids to the 1 kid,
Yeah.
which with including it what's called a gift of equity. So they would take out a $300,000 mortgage,
Right.
pay off the other 3 siblings, and then that $100,000 is showing up as a gift of equity, and that's okay in
On
your
my
world.
end, absolutely. Yeah.
Of course it is.
Yeah.
Yeah.
And there's
He can do anything.
He doesn't
But I
need
think
to
you
have
might
the
just-
borrower have a job, income.
Yeah.
You want to talk about that? Yeah.
and we could do a whole show about different underwriting scenarios, but
Yeah.
there's a lot of different programs out there where someone can, have a border and you can count that towards income. You can have a non-occupant co-borrower.
Yep.
There's
Yeah.
a lot of different things. You can have an accessory unit in a property, that has its own kitchen and bathroom that you can be getting rent from, and that can help you buy the house.
Right.
So, not necessarily just a 2-family, but an
Yep.
accessory
Yep.
unit, something over the garage. So there's a lot of different programs out there to help people get into a home and buy
So
it.
buyers shouldn't be that defeatist.
Right.
Young buyers shouldn't
Well,
be that
and
defeatist.
they shouldn't be intimidated. Just from us talking here,
Yeah.
we've
Right.
given them five ideas on
Right.
how to get around the 20%. And if you hook up with somebody like, Lou or John or us, we can lead you to the right person to give you the right advice.
And we don't don't necessarily want to sugarcoat it. When you apply for a mortgage, there's going to be a lot of information that you're going to need to bring, and you need to go into it with an open mind, knowing that I'm going to bear all and show everything.
Have an open book.
And, when your loan originator tells you I need this list, you need to gather
Absolutely.
that information. And then the process is going to go that much smoother.
And you need to file your tax returns for the current year that you're, or the year before.
Good point, Kathy.
And just because you're
You don't have to.
but you won't get the loan.
Oh, we've had some.
We've talked about, over the last couple of months on our podcast, we talk about war stories that keep coming up, and that's one of them.
Well, we had one borrower who didn't file the last 2 or 3 tax returns, and we figured, all right, oversight. No, he was in jail for a few years. Couldn't do. Yeah, so
that closing didn't happen.
Well, if it was a good letter of explanation, could have made it work.
Yeah.
So one, he's not kidding. So one of the themes of the show, and we keep saying, is you might want to rearrange how you're calling the professionals. Years ago, when we all started off, and still to this day, the real estate attorneys would get called last. The bankers
After they already signed
they've signed everything.
The docs.
They've called the banker. I would not do anything these days without calling a banker first. You just don't know what you qualify for.
No, I just got a referral from a realtor, and I talked to the person. He's like, "Oh, I'm thinking about buying in about a year." I go, "What's the wait?" He goes, "I need to save money." I go, "No, you don't."
No, here are my 7 reasons.
Yeah, I said, because I was talking about the MassHousing program. I go, "What if I can get you no money down, $400,000 home?"
Do you say I'm in?
He goes, I'd buy tomorrow. I said, then start packing.
Yeah.
But then some people may come to you and say, I'm not able to buy a house for a year because I have some credit things going on, and you can look at his credit and tell him what he needs to do so that you could qualify him.
Yeah, absolutely. I mean, a lot of people think that credit's a lot worse than what it really is.
Right.
So I've had some people say, "Oh I'm late every month," and come to find out they may be 3 days late. Well, unless you're more than 30 days late.
And then there's some people that their credit's a lot worse than they think it is. But
yeah, some people have
which is why
they have a false sense of accomplishment.
Right.
And we have some people at refinances who husband hasn't told the wife that they have 15 credit cards. I would love that. Does credit affect mortgage insurance?
Oh, it does. Yes.
Yeah.
Yes.
So the lower the credit, the higher they're going to pay monthly.
Right.
Or
There's Arch MI is a risk-based MI company. So there's 17 different factors that go into pricing that mortgage insurance
and they're figuring out their risk based on your financials.
Right. But there is a loan for everyone, and I think, and there's a situation for everyone. And it may not be immediate. You may need to wait a while, like John said. He can work with you.
Yep.
Or some people, think they have to wait, but maybe they necessarily don't need to.
Like your guy.
They are ready.
Yeah, no, and I had a situation where a guy was, he didn't have the best credit score, and his PMI was unbelievably expensive, but he didn't care because he said, "You know what, my situation next year, I know next year I'm expecting all this money. I'm going to pay that thing down anyways in the PMI." So he didn't care. He knew what was important was to get into the house.
Mm-hmm. Right.
So,
and Kathy, back to what you originally started this part of the conversation about, I think everyone needs to get their partners in order before you even start the home search process. You want to find a realtor that you feel comfortable with. You want to find a mortgage banker, and you want to find an attorney. And get those people and meet with them and make sure they understand what your goals are and work with them. And they'll all work with you and help you.
And the professionals that you pick set you up for success.
Exactly.
So
it sounds like we're close to wrapping up, but I'd love to. Can you give your information out? Because I'd love to see those 17 items.
Sure.
And I'm not going to make you do it now.
There are some.
I'm guessing it's just the same 17 items that John uses to qualify them.
no.
Right.
No?
No, it's different. It's different.
Oh,
yeah.
all right. So
if you go to archmi.com, there's some consumer information that will give consumers information. So it's archmi.com, and you can poke around there and get some information.
He's got 17 credit. He has like 2. Are you breathing?
Lou does all the hard work for me. I just type in the scenario and it spits out. There's the rate.
You're breathing. You qualify. All right, give your information out.
he doesn't like
all right,
to.
he's at NewFed.
Yeah.
1-877.
Here's a mirror. Fog it. Put it in a bag. You're good.
All right.
Just Google me.
Oh,
Yeah,
that's
Google
right. John
him.
Marroni. Google John Marroni.
Marroni.
And Kathy Holtshouser, you're currently working at where?
Carter Law Office. We have an office in Reading and an office in Salem, New Hampshire, and we can be reached at 781-944-9222.
Was that so hard?
No.
Now, Ryan Carter keeps telling us they got to like us.
Oh, so you guys, if you're looking at our podcast today, you need to like it and subscribe.
Give
and
us
it helps
5
us.
stars.
Give us 5 stars, unless you're not happy with who we have on, and then you can give us 4 stars. But
And then you got to look at all of Renee Carter's stuff that she's sending out with our fun facts for Friday.
Yep.
And that's about
We're a big deal.
We're a big deal. I'm exhausted just hearing about all our.
This is exhausting.
We
You
told
got
you,
that
Lou.
right.
No, it hasn't been 2.5 hours. We're done in 20. Lou Chinappi, thank you very much. John
Thank
Marroni,
you.
the Iceman. Appreciate
Cheers.
it. Kathy Holtshouser, Paralegal Extraordinaire, and this is Rick Carter. We'll see you next week. Tony V will be back. Thanks, and we'll see you later on.
All right.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.